No. Hey, what's up, everybody? Trent T. Daniel back with another edition of Mastering the Markets, the show created specifically to keep you from becoming a broke ass trader. This is a no broke ass trader zone. We don't do broke ass traders here. And if you are one, we're like broke ass trader rehab, so we can help get you out of that situation. Okay. Before we do anything else, please hit that like, please hit that subscribe, and please hit that notifications button. The like button lets us know and everybody else know that you're enjoying what we're giving you. The subscribe button puts you in a position to be able to get more. And the notifications button will make sure that you'll get alerted whenever we upload new content. Okay, let's talk about institutional money. This is part two of my series that I wanted to do on understanding the institutional money, which means understanding the institutional mindset. So let's go ahead and jump right into things and we'll do a quick recap of where we left off. Basically, what I was talking to you guys about was this trade that I got into here, way up here. But because I saw this big long movement right here, you see this big long movement. I mean, this is just insane, and this is literally speaking 1500 pips. Okay, this is just insane. Okay, this is just a monster move right here. Okay, but after this move, guess what? Then all of a sudden it went into a zone of consolidation, which you can see right here. Okay. When I saw this zone of consolidation, I literally went ahead and I'm more of a risky trader, but I don't just throw my money. I don't gamble, but I want to go for the best payoff. So I went ahead and fired a trade off right after this price broke through that trend line right there. I went ahead and fired a trade off to the downside. And as you can see, I'm doing pretty good on that. Now, here's why I was able to do that. And it's because I have an institutional trader's mentality. I did not always have that. I used to jump into this thing and be looking at this like, oh, wow, the price is going up and it's in a consolidation period here, which means it's gaining more energy so it can go up more. So let me get myself in position to go long. Didn't work out that way. Okay. And then I'd be like, well, you know what? If it does break out of this area of resistance, yes, resistance, it's going to go up. So what I'm going to do is I'm going to use TradingView. I'm going to set an alert right here. I'm going to put an alert on this to go ahead and put in a trade to send over to my MetaTrader 4, because if it goes up that high, it has to be going up more. And then I can catch a good 15 pips out of this. Didn't work. Okay. Here's why it didn't work. Because I was not thinking like an institution. I was thinking like a trader. The reason institutions are so successful is not because they go with the trend, they are the trend. Retail traders like myself, like pretty much everybody, in fact, I guarantee if you're watching this video, you are not an institutional trader, okay? But the people watching this video, people, typically people on YouTube looking for information how to trade, you guys and we all represent the retail market. Now, the problem for the retail market is that we're always the fly on the horse's back. The horse is running, and we're just the fly on here, and we're looking to take advantage of what they're doing. They're going to get us where they're going. Well, when I know how to think like an institution, I don't make a lot of the mistakes that I made as a retail trader. In other words, I don't try to convince myself that this is going to go up. So let me put a buy position right here, just above this, and then catch this move up. Because a lot of times, what would happen is, let's just say I'd set my order there, and this was so frustrating, and I always felt like there was like somebody waiting for me to hit. There was like somebody assigned to Trent. And it's like, okay, if he does a buy order, let's jump in there and let's screw that order up. And it just doesn't happen. But I just took it personal. I felt that way. So here's what I used to do. Okay. I used to put to create my zone. This is about 15 pips away. I'm not going to measure it because it was silly. Then I go and I put an order in here and do all the little syntax to send the order over to my MetaTrader 4. I'm going to pick up 15 pips because this thing is going to fly right through. At some point, it's consolidation now, but I'm going to catch this. And here's what would happen. Price would go whoop, just like that. Okay. and then the price would go. This was so frustrating. It will go whoop, just like that. Okay. So what that would do, and let me just color this in for you. So this would be a red bar, and this would be a green bar here. Okay. So I'm really happy. I'm seeing this thing go. Oh man, it broke. It broke it. It's 5 pips up. It's all I've got to do is go another 10 pips, and then I'll catch my little profit. Problem is, I'm gambling there. Okay, because I have no reason, I have no thought in my mind of why this could be a valid trade other than I feel like the price is going to break through this level and go up. Well, I'm not thinking like an institutional trader because institutional traders don't feel. Okay, institutional traders make things happen. You ever wonder why a market maker is called a market maker? Because they're making the market. Okay, so literally speaking, this was stupid. All right. And so we're going to take that off of there because I have no clue if this thing is going to go up or not. But the big gamble I'm taking is that it's going to go up, it's going to spike up there, it's going to hit that entry point, then it's going to drop off. That happens so many times. Now that I think like an institution, here's what I did to get in this trade. Let's keep that up there. Okay. What I did is that I watched this. I never took a buy order anywhere in here. Never. Even when they say, well, go buy the dips. Listen, it's too risky. Okay. It's too risky because I don't have to do it. Okay. Yes, you can make some money if you catch something on an incline and you buy the dips and it comes down and it touches that line, that trend line, and it goes up. And yes, you can make some money, but how do you know at any point in time on this trend line that you're buying that this thing isn't going to bottom out on you? How do you know it's not going to break through these trends somewhere along? It happens all the time. But when I look at and things and I have an institutional mindset, consolidation after a big move tells me something, which means retail money has pushed, and pushed, and then retail money has started to run out. See, the institutional money moves the market, the retail dollar keeps the market flowing. Because think about it this way, the reason why 99% of the nation's wealth in the United States is controlled by 1% or 98%, and two is controlled by two, you know what I'm saying, is because the money only rests with a few people. Did you know there are less than 30 people that own 60% of the wealth in this country? That's insane. Okay. But when I look at it that way, how can a trend get started? Well, a trend can get started if those 30 people get together and they do something. And then everybody else is going to jump on because they're doing it. And that's where the retail money tends to move the market. But once that retail money starts to get thin and get choppy, this is what happens. Look at that. You've got a battle now going on between the Bulls and the Bears. Okay. So retail money got thin. Retail money took these institutional investors who created this movement. They started this, guys. They started this movement. And guess what? The retail carried it on and made their investments more valuable. So if I have $1 invested here and I do a trade all the way up here, this was 1,500 pips. Let's just say I'm going to make $1 per pip. I'm going to make $1,500 because retail money carried me up here. Now, okay, we'll come back to that. So I'm now running into this period of consolidation. What does that tell me? Well, the retail money has fallen kind of thin. And here's how you know that. I get up here and then all of a sudden I get a push down, get a push up, get a push down. What's going on? The buyers and the sellers are now fighting for control, okay, and fighting for position. But remember, the institutions, those are the guys with the money. They don't have to go through this. Consolidation has nothing to do with institutional money, okay? They're not going to get in this little battle. This is little scrappy little retail stuff here, okay? When the institutions say, okay, we put $15 billion into this trade right here, and it's gone up. Let's see what on a percentage basis what this increase is here, because this is just going to blow your mind. Okay. This is what is that? 7, 8, almost a 9. Well, I got my damn thing in the way here. This is about a 9% increase. Okay. In fact, let's just be more accurate because this is part of the lesson here. All right. This is a 8.5% increase. We got $15 billion we put into this, and it's gone up 8%. That's a pretty good come up. All right. So then all of a sudden the little scrappiness goes on. So because I think like an institutional trader, I am more confident in a trade on this one to the downside to short this than I am to think that this thing is going to continue. Because the only thing that I would be basing my thought that this is going to continue is what has already happened. Okay. This move has already happened. So I have to believe that this move is going to continue. Okay. In order for me to take this long. But in order for me to take this short, I'm using something that's already happened and something that's happening. What's happening is the consolidation means institutional money isn't here. Okay. This is basically a zone where there's supply and demand and they're starting to push against each other. Okay. But there has been big profits taken. So what makes sense? Well, we made 8% on $15 billion. Let's do it again. Let's sell another ticket on the Ferris wheel. So all of a sudden, guess what? You start to see sell off. And the sell off is institutional profit taking. As institutional profit taking happens, then you start to see the retail profit taking. And then all of a sudden, you start to see panic. And then all of a sudden, guess what? Stop losses are taken out. And the markets come right back down here to where they started, to another level of institutional demand. These guys have $15 billion that they need to fill the order. They're not going to fill it on this thing getting higher and higher price. They're certainly going to fill it by taking the price down. It takes out all these stops. It takes out all these stops. If people dump and people take profits, it releases inventory into the market, and then they bring it all the way back down here. And then guess what? They get on that Ferris wheel again. This is why you see prices going up and down between certain zones. If you understand the institutional trader mindset, you will make better decisions. It is a better decision to go here with 5 lots to the downside than it does to make 1, 2, 3, 4, 5 trades to the upside here, hoping this will continue. All of this is hope. From the moment this starts, this is all hope. When this happens, this is a sign that something is about to happen. Okay. Then you look at what is most likely. And hey, if you bet on something and there's an 80% chance of winning, a 70% chance of winning, then you're much better off than kind of a 50-50 grab here. Okay. So trade like an institution. So institutions think in terms of, I want to buy low and sell high. But like I used in my example, buy low to me could be buy high to them. It is buy high to the institutions, okay? Because they have so many orders they have to fill. I might do, if I'm just really jamming it, I might do a 10 lot trade. These guys might be doing 6,000 lot trades, 10,000 lot trades, a million lot trades. It's unbelievable amounts of money. I'm a little pebble in the pond on this one, okay? So the reason I'm teaching you this is I want you to start to see support and resistance zones as really what they are. It is supply, which is going to be resistance, and demand zones. Let me ask you this, okay? Let's just clear all of our drawings right here. All right. And if I draw a box from here to here, okay, where do you think the hottest zones of activity are going to be for me to look for an opportunity? Okay. Is it going to be, and I'll give you some options, is it going to be from here down and from here up? Or is it going to be in the center part here? Well, think about it. Where did the action already happen? See, this isn't action, guys. This is just the ripple in the pond continuing to ripple. The action was right here. The action is up here. So this is why I look at every trade from a standpoint of hot zones. The top 20%, and this is actually a little much, but I did that because there was some support there. The top 20% of my box between the low and the high that I can see on the chart, okay? Local, low, and high. Now, if I really want to get crazy, I would go back here, but I want to go local. This is back to November of last year, so that's like 3-4 months ago, so that's fine, okay? So the top 20% of the ocean, okay? I want to know how that big tsunami wave started. I want to go to the origin of it, and that's here. I want to know when that big fall off started, and that's here. So these are the areas where you want to be making decisions to play. Now, it does mean that your trading is not going to be as exciting as it maybe used to be because you're not doing anything in here. You're just staying out of the fray. I know it's so tempting. You've got your indicator and it gave you a buy signal and you want to buy, and keep doing that. That's fine. But at the end of the day, I want to make a lot more money and I want to take a lot less risk. If I make my decision here, I basically have one of three conclusions to come to. Is this thing going to go up? Is it going to go down? Or is it going to continue to consolidate in range? Okay. Now, what I do know that the thing that is least likely to happen is that this price is going to continue to range forever. That ain't going to happen. It's not going to consolidate forever. So now that's moved into like my 5% possibility category. Okay. Then I look to, is it going to go up or is it going to go down? Well, based on that, it went up in the what I call cool zones. That doesn't tell me anything here. So the option of it going up becomes weaker because it's not doing what it did, which means the momentum fell off. The ripple in the wave is not as big. The ripple in the pond is not as big as it was far away as it is close to it. Okay. So now I look at, okay, 10% chance this thing will continue to range. It's not going to continue to range forever, but that's 10% chance. So because it took momentum for the price to get up here, and that momentum has subsided, I can clearly see that. I would say there is less of a chance that it's going to continue to go up, which leaves me with only one option. It's going to go down. So then I either want to play it, be a little more risky, and I go ahead and just take a trade to the downside here, or I want to be a little conservative, let the price go up as high as it does, let it come down, and hope it'll come back up and retest and then go down from there. Okay. Which helps to confirm that. But I've seen enough right here to give me confidence that I can go ahead and do a trade. And honestly, I would I threw 5 lots at this. Realistically speaking, I wouldn't have a problem doing 10 lots because look at what my downside is. Okay. So let's just say I get into this trade and the price is right here. It's in the lower part of that hot zone there. Okay. Let me ignore that. It's in the lower post of the hot zone there. So I go ahead and look at this and I say, well, this is where it's been. So I'm going to put my stop loss right there. Okay. Just above that. I'm not going to put something up there and say, oh, it'll go up there and it'll keep going and I'll get my 15 pips by going long. I'm going to put my stop loss there. So realistically speaking, I have got 221 pips, okay, of potential risk here. But I mean, if I'm doing one lot size, that's not the end of the world. Okay, it's $2,000. But look at all of this profit potential that I have in the cool zone. Okay, because remember, the cool zone is just ripple in the pond, ripple in the ponds. It just continues to fall. It continues to fall. It continues to fall. It continues to fall. That's pretty cool. I can live with that. Okay. It's just falling up here between this point and this point. I'm only 200 something pips, but I've got 1,400 pips of potential based on this cool zone. And then when the price enters into this hot zone, then what am I thinking? I'm thinking like an institution. The prices got cheap. A bunch of stop losses, a bunch of take profits have been hit. So now guess what? We recharge the batteries and we make those they do that $15 billion trade all over again. And that's what creates the bounce here. Okay. So I hope this has been helpful for you because it's really important, guys, to think like an institution. Think in terms of not support and resistance. Think in terms of what caused, what's the story behind the support and resistance. And if you get to the point where you understand that, and that's how you think about trading, then you're going to find yourself suffering a lot less losses because I can handle a 200 or 300 pip loss for a 1,500 pip gain. And then when it gets down into the lower zone there, I'm thinking like an institution. I'm looking to go long where some people are looking to go short because they're hoping that the price will break through. Look for evidence, guys. This is a circumstantial case, but a circumstantial case is based on circumstantial evidence. You never know 100% what the markets are going to do. There is no smoking gun. But what you can do is you can based on really just kind of getting rid of certain options and which is more likely to happen, then that'll bring you to a point where you can make a good decision and feel confident in that decision. Even if you start to see some back and forth, you're up a little, you're down a little, you're up. Because again, going for a longer term trade, you want to play in those hot zones and let the cool zone be just a continuation of whatever it is that you did. Okay. Hope you enjoyed this, guys. I will be back with another video really soon. Again, if you would please hit that like and that subscribe button so we can let the people at YouTube know that we're really cool and let everybody else out there viewing this know that we're kicking out some great content for you. Thanks a lot. We'll see you later on. Take care. Bye bye.